Hey guys, welcome back. I hope you had a really great day trading today. So the markets were a really wild place to be today. All indices closed green and IWM just destroyed shorts today. And today was Tuesday, July 16th, and we did open SPY with a gap up. We gapped up to just underneath halfway up the implied move. And the day before, we actually closed just above that 35 EMA, which has been a critical support during this low volume melt up. And today we gapped up, and then from there we made a push up to get to all-time highs. We did get pushed back down a little bit short of that level, and then we did swing back up, try again, and made new all-time highs just above the previous all-time highs. You can see the little wick right there. And then we ended up closing within the implied move. So 565 was the top of the implied move. We closed at 564.86. So options did a great job of predicting that move last night. So we did make new all-time highs. SPY did close up 0.59%. VIX also closed up 0.53%. And we did close within the implied move. And switching over to QQQ, we did see a move up today as the first move, and then we did get pulled back down underneath the 35 EMA. And if you recall, last night we did close underneath the 35 EMA. So today we did see follow through and we did push lower, and then we got all the way down to the bottom of the implied move. I did have the bottom of the implied move at 493. Good job if you bought calls at that level. We did bounce right exactly at that level and got pulled back up to the 35 EMA, and we did actually today close above the 35 EMA. This is of course on the 30-minute time frame, and QQQ did close up 0.04%, so pretty flat. VXN also closed flat, 0.00%, and we did trade completely within the implied move in QQQ. So here options also did a great job of predicting the move. And then switching over to SPX, we opened with that same gap up and then pushed up and got rejected just underneath all-time highs. Then we swung back down, not quite all the way down to the 35 EMA. And then we made a run to make new all-time highs just by a little bit. Previous all-time highs 56.66, 94, and we closed 56.67.21 today. So just a little bit above previous all-time highs. SPX did close up 0.64%. VIX again up 0.53%. And we actually closed in SPX just a little bit outside of the implied move. And I did trade these spreads. I sold 56.65 and 56.67. And my spreads did end up closing in the green. They were up 22%. So that was definitely a close call right here. I didn't expect that move, but I did still have a green day. So just outside of the implied move in SPX. And then IWM has been absolutely wild. We did open with a gap up today and immediately got outside of the trading range and pushed up, had a huge day, up 3.41%. RVX, the Russell Volatility Index, did close up again 10.1%. And we barely even touched the implied move today. And I, for one, did not expect this move. I don't think a lot of people expected this move. It has been a huge week for IWM, and that's good. Small caps definitely need a little bit of love. And if you can see right above us, we do have a bear gap. I will get into that in the second half of the video. Absolutely wild day. Hope you guys all made money. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Leave me a comment tonight. Let me know how you guys are holding up. And also don't forget to subscribe and turn on notifications so you always know when I do post new content. And I haven't posted my links in maybe a few weeks in the comments, so I have two tutorials, and the first one is my chart settings in TradingView from start to finish. You can set up your chart. That's going to be in the first pinned comment. And then the second one is a quick 3-minute tutorial on how to calculate these values right here, both the implied move and the 30-day average volatility. So if you want to learn how to do that for yourself, those two tutorials are going to be in the pinned comment today. All right, so starting in SPY, the implied move for tomorrow is between 561 and 568, and that is from options. And the 30-day average volatility is a little bit wider, 559 to 569. And then the implied move on Wednesday's contract is between 560 and 569. And to the upside, the first level to look for is going to be where we made new all-time highs today. That was with that closing candle. We did push up just a little bit above the previous all-time highs. Another day, another new all-time high. So that is at 565.16. And then if we get above that, the top of the implied move is at 568. And the top of the implied move for Wednesday's contract is 569. And then right now, ES futures are down 0.14%. And if we do open down, then the first level to look for is going to be this 35 EMA. The 35 EMA has defined the uptrend for the entire month. I believe it was the entire month. Yeah, so we bounced right here at the very end of June, and then we got above that 35 EMA, and we have been getting caught at that level since the beginning of the month. So that 35 EMA is going right through the bottom of the implied move. And then underneath that, we do have the bottom of the implied move is 561. And then the bottom of the implied move on Wednesday's contract is 560. And then just underneath tomorrow's trading range, we do have this up gap. This is from PPI last week on Friday. The bottom of that gap is at 556. So if we do see a little bit of weakness, maybe break this level, and you're looking further out into the week, then maybe 556 would be a level to look for. We do also have that 30-minute 200 moving average. Still, the momentum is strong and up. Even if we pull back to that level, we can still stay bullish. But if we zoom out just a little bit, we do touch down with the 30-minute 200 moving average at a regular interval. And for the past 2 months, we've definitely been trading above that level. And in my opinion, again, trade the chart, not my opinion, but it is my opinion that we're maybe getting a little bit due to touch down with that level. It definitely may not be tomorrow, but in the near future. You can see the weakness right here starting to show up in Stupid Willie. This is a bearish divergence. It's harder to see here. You can see it a little bit more clear in RSI, and you can see it on multiple time frames. This is just one time frame, but I'll let you guys go on the other ones. The 1 hour, the 2 hour, the 4 hour, a lot of time frames are showing that loss of strength and the bearish divergence. So I'm keeping an eye down here, but of course volume is still low, and with that low volume we have been seeing that 35 EMA catch us. So that is SPY. And switching over to QQQ, and let me get back to my other setup here. The implied move in QQQ is between 492 and 501, and that is from options. The 30-day average volatility is between 490 and 503, and then the implied move on Wednesday's contract, 490 to 503 as well. The first level to look for is, I'm not going to say it's to the upside or to the downside, but it's the 35 EMA. We closed basically right at that level. So let's add that in there. And when we open, that is definitely the first level to look for. So NQ futures are down quite a bit right now, 0.31%. So that looks like we could potentially open underneath that 35 EMA. So if we do open underneath it, then that's going to be the first level to the upside. We did see the 35 EMA as a little bit more of a resistance here. Nasdaq and a lot of the tech companies have been selling off. There has been profit taking. So naturally QQQ is taking a little bit of a hit. So we did see resistance here today. And we did come back up. We closed just a little bit above that level, but definitely a key level to look for right at open. And then if we do get above that, then the next level to look for is the top of the implied move at 501. That is also where we do have resistance from Monday. So 501, and then 503 is the top of the implied move on Wednesday's contract, and just outside of tomorrow's trading range, we have all-time highs. We did make all-time highs last week, and this was the second day that Jerome Powell spoke, and then the following day when we had CPI, we made those all-time highs, and then we had a big tech sell-off. So 503.52, that is where we have all-time highs, and that is just outside of tomorrow's trading range. And then to the downside, we do have bottom of the implied move at 492. You could argue that this right here is a support right here from today. This is where we did have the bottom of the implied move today. So that is just above 493. And then so 492, bottom of the implied move. 490 is the bottom of the implied move on Wednesday's contract. And we do have that 30-minute 200 moving average just underneath the trading range. Again, I think we are super overdue to hit that 30-minute 200 moving average. It has been a strong support. It has had strong momentum. You can see the bounce right here. And let me go back just a little bit further to when the last time we touched down. So that was back at the beginning of June right here. And from here, it looks like we are on our way to hit that level. All right, so that is QQQ. Then switching over to SPX, the implied move over here is between 56.35 and 56.95. That is from options. And the 30-day average volatility is 56.10 to 57.20. And then the implied move on Wednesday's contract is between 56.25 and 57.10. And the first level to look for to the upside is where we made new all-time highs today. That is at 56.69.67. So let's just call that 56.70 if you're looking for the closest strike. And then if we do get above that, it is 56.95, top of the implied move. And 57.10 is the top of Wednesday's implied move. And then to the downside, we have the 35 EMA right here. And super important level, it has caught us for the entire month of June. Sorry, we're in July. The entire month of July. And if we do get underneath that, 56.35. Bottom of the implied move on Wednesday's contract is 56.25. And we do have the next support, if we break that, is going to be right around here. We do have an up gap from right before Powell spoke last week, the first time. The bottom of that gap is at 55.72. Let's call that 55.70. And the 30-minute 200 moving average, it is definitely my bias that it is time that we hit that level. And that is underneath the entire trading range and quite a bit out. So momentum is still strong and positive and bullish. However, I do think it's time that we pull back. But again, watch the chart. Don't take over my opinion. Trade what the chart is telling you. And that is SPX. And lastly, IWM. The implied move over here is wider than it's been for quite a while. We have 220 to 229, and that is from options. And the 30-day average volatility has had a pretty strong increase because of this rally, 219 to 230. And the implied move on Wednesday's contract, 219 to 230. And to the upside, the first level to look for, and I'm not sure it's really a level to look for, but it is just right underneath where we closed, or right above where we closed, is the recent highs that we made. It's not all-time highs, but it is the highs that we have made just recently, and that is at 225. If we do get above that, then the top of the implied move is at 229, and we do have this bear gap right here, and it goes back quite a ways actually. That bear gap is from right here. Let me actually get back on the the 1 day time frame here. You could see right here, and open gaps like that, long time open gaps, can definitely act as a resistance level. Alright guys, so I had some technical difficulties with my computer. The video cut out, the audio wasn't syncing up for the rest of the video, so I'm just going to cut it short here. Hopefully this is enough for IWM to get you guys through tomorrow. Have fun tomorrow, trade safe, make sure you take profits when you're out, and I'll see you guys tomorrow.